Building Blocks, 2025 in Tel Aviv, the future of tech.
Hi, everyone. Welcome. Maybe you can call the last people that wanted to join. I'm Tom Arniv. I'm leading Web3 investments at Entree Capital. It's a global generalist fund managing $1.25 billion AUM, located here in Tel Aviv. It's a pleasure to have our dear panelists today. Maybe we'll do like a quick introduction, and then we will dive into the business.
Sure. Nice to meet you, or nice to be here. Thank you, guys. I'm Einar. I'm from Corn Fund, one of the earliest Web3 venture funds. On the venture side of things, we have a seed fund and a venture fund. It's $160 million and $320 million. So we do seed and Series A investments typically based out of New York.
Hi, everybody. My name is Travis Scher. I'm one of the co-founders of a firm called North Island Ventures. I've been an investor in the space for 10 years. Prior to North Island, was at Digital Currency Group in New York. Our fund does both early stage venture investing, liquid token investing, and yeah, it's a pleasure to be here. Thank you all for coming.
Hi, everyone. My name is Avishai Ovadia. I'm a founding partner at Collider. Collider is a Web3 crypto blockchain fund based in Israel. We are here from 2018. We are deploying our second fund at the moment, doing usually seed, pre-seed. Together with amazing co-partners.
Hey everyone, I'm Amos Meiri. Been to crypto since 2012. Started a protocol called Colored Coins a long time ago, and now managing partner and co-founder of Node Capital. We run 3 funds now, investing through our second venture fund as well as liquid fund, and same as all of us. Like very happy to be here, and thank you, Collider.
Thank you. So I think we've seen in the past years different approaches to Web3 fundraising. We started from traditional VC fundraising, then some ICOs, IDOs, IEOs, and maybe some other IOs and IOUs. And today we have crowdfunding platforms, from Legion, Echo, and all the ones like CoinList. And I think the recent trend, fair launches, if we know what it means, maybe we'll figure out today. And I think that it's interesting to discuss about the balance or the alignment between founders and VCs today. So from one end, people are saying that at least in the past year, many VCs are trying to get like short-term exits, and then founders tend to go to more crowdfunding strategies. And on the other end, we see projects that are doing fair launches, and that creates like a whole new category of different risks that we saw 5 years ago in the ICO era. So maybe I will start with Avishai. Maybe you can tell us from your experience working with founders, how can we, like, as VCs, as investors, how can we rebuild trust with founders and like realign about building for the long term, building decentralized protocols?
So let me tell you that we just redesigned our landing page at Collider, and you can check it out. And we set together the entire team to think, what do we need to write there? As like, what is Collider? What's our value add? So I told the team that if I had, if I was brave enough, I would basically write down in a very big red letters, our goal is to make our LPs very, very rich. That's our goal. This is what we need to do. This is why they are paying us. But, in the end, what we wrote, and what I'm assuming all of you guys wrote, is value add, long term, all of those a bit fluffy words, I would say, because we are in misalignment with our entrepreneurs. They basically want us never sell, right, our tokens. And we need to bring back DPIs, especially in those times. So the problem is there. I'm not sure that Legion and Echo are going to solve it. I think that Legion basically tried to distribute the decision making on when to sell to a bunch of other people. And we saw that most of the people want to sell. So they didn't solve it. Echo, we don't know yet. Time will tell. But Pump Fun is quite interesting. I think that fair launch is challenging, truly challenging us as VCs. And I think Pump Fun, together with AI tools, meaning one entrepreneur, I participated in a panel a few days ago about that. The next billion-dollar entrepreneur that building a company by himself is out there. And together with crypto and Pump Fun, why do they need us? It's a question that we ask ourselves. We answer is that they need us when shit hits the fan. And in crypto, it always does. And in my perspective, they want you as a psychologist, as a friend, as someone to call 24/7, to be direct, transparent, very, very open with them. And beside that, they want silence. They want basically not to hear from you and your capital, obviously. So we are getting challenged, all of us here, and that's our solution.
So I would add another goal, and I think to be like the VVC, the fixer, let's say, is one role. Another one I think is like being an underwriter, because when, like you mentioned Legion, and when Legion are now launching a new project, they are basically underwriting it for the retail investors, and it's like a lot of responsibility. A lot of responsibility that was developed in the VC industry for tens of years, and I think, speaking of which, so Einar,
Tomer,
yes,
I don't know, like for me, this is really not something new. I totally disagree. Like we had crowdfunding, for years now. It never worked. The wisdom of the crowd is something that doesn't work. Many projects.
He's saying that they are
no,
not
that's
wisdom.
exactly what I'm saying. I'm saying
Yeah.
that Legion probably can't be a good underwriter for projects, although that retail investors might think that if they see, I sign to Legion and I get a weekly email about a new project, and it's the same problem as crowdfunding. You think, oh, there might be a great opportunity here. Maybe I'll put like $1,000. Who knows what will happen?
It's much
On-
better because you get straight up liquidity. You can get the tokens and sell them immediately. It's like a flipping
Much better for who? Yeah, that's the question.
for the crowd that you try to help.
And and let's give the other example. Other example is Confund, for example, investing in a project. It can be EtherFi. It can be I don't know, even a liquid. We also do liquid investments, right?
It's Solana.
What was it? WorldCoin, I think. Okay, so that's like a great example. So Confund invests a liquid investment in WorldCoin alongside other VCs, and it's out there. It's open for the free market. So what does it mean for the what kind of signal does it give for the retail investor? But my question is to Einar, how do you identify like those projects with the long term value?
Yeah, I think we have a couple of different frameworks that really matter and helps us think about how to create long-term value. For us, it's always a team market product. It's a very simple framework. I think everybody here has probably heard it a million times before, but just because it's simple doesn't mean it's easy. And so, really, kind of finding the people who are in it for the long term and are able to build actual products with usage is really the main thing. And then when it comes to underwriting things and kind of investing in things, typically I think about it as like how do things increase in value? They usually either and if they're valued on their cash flow, they usually either increase if the cash flow increases or if the multiple on the cash flow increases, right? So the demand. And in crypto today, there's very few things that actually trade on multiples of cash flow, right? So there's a lot of things that's just driven by demand. And this is when you get into comps-based investing, right? So it's like, okay, I'm going to comp this as like an L2 or whatever. And but we see the most mature protocols out there, if you're paying attention, they're actually starting to come and start trading on their fees, on multiples of their demand. So our approach is to underwrite from a fundamentals basis and to say like, hey, if there's a real product here that generates real usage, then that is what we're really looking for. and then we'll see what the multiple and the demand happens over time. And the reason for that is because it is very hard to predict demand, right? Like it's very, very hard. This is what liquid traders do all the time. They look at comps to say, hey, like, so you can go and say, hey, oh, this is an L2. It's going to get comped as L2s in the future. But what, at least for me, is easier to predict is to, and which is still hard to predict, is, hey, this is a product that makes sense with a team that knows how to build it and get the customers. And so those are that's sort of what we focus on when we look at long-term underwriting. You know, on the venture side, we underwrite projects from 5 to 7 years typically. So it's a very, very different model than, hey, buy a token and flip it after 12 months. You know.
Yeah, got it. Travis, do you think, like, what's your view on, first of all, on like those crowdfunding platforms? Do you think that there's a way to collaborate between those platforms and VCs? Like I've recently I have seen that in Echo. So in Legion, it's like almost like traditional crowdfunding, and in Echo, you need to have like a group leader. So Echo is not doing the underwriting; they nominate someone else to be the underwriter, but then Echo is like the underwriter of the underwriters because they decide who can be a group leader that will shield a project for their community. And I recently saw that there are also now VCs that can be group leaders and in Echo. So do you think that it's like it's competitive, collaborative? Is there even a room? Is it sustainable? All those platforms?
Yeah, look, so when I was at Digital Currency Group, we were a seed investor in CoinList many years ago. So these crowdfunding platforms have been around for a while. You know, we've been having this debate about the role of VCs in crypto since 2017 when ICOs really got going. Um, my view is that there are a lot of misconceptions about, you know, what role VCs may or may not have in crypto, and that actually the starting place is that it's not so different from the world of traditional technology and traditional venture. I mean, for us, just put it into context, probably half of the investments we make are in traditional equity startups, and that's probably true for everybody up here, something like that. It may not be the exact same number. So there, we're playing the role of a traditional VC who has sector-specific expertise. Even with the folks who are launching tokens and creating protocols, they need many of the same things, right? If they were to just get going by doing some, broad-based crowd sale to a bunch of anonymous retail investors, who, by the way, are likely to be even more short-termist than the venture capitalists, um, they're not going to they're not going to have partners who have experience, with companies like theirs before. And they are basically companies and businesses. So, I think all of us offer connections. We offer advice based on experience that you can only get by doing. Some of us offer different services to our portfolio companies. So, the answer is crowdfunding has a role to play here. It's, in many instances, there is a good business reason to have broad-based distribution of the token at a certain stage. But in general, I think your starting place should be there is as much of a role for VCs in crypto as there is in the rest of the technology industry.
So I think that the main business reason for projects to do crowdfunding is to bootstrap a community. And maybe, if you look at the market dynamics, and maybe it's a bad thing as an industry. Why do you need a community? For listing. So basically, maybe the problem starts with the exchanges. And we saw Brian Armstrong speaking about how they should be more of doing like text listing processes instead of sex listing processes, or how can they expedite the listing process? Because basically, if the end, not the end goal, for some projects maybe it's the end goal, but sometimes obviously you need to list your token in an exchange, and no matter what's your stage when you're going to listing, the exchange will ask you, okay, how big is your community? How many followers do you have? And they need to, oh, damn, I need to get a community. And the best way to get a community is to shield your token through a crowdfunding platform.
Yeah, one other note on this. I think some of this has to do with sort of market structure in crypto today. So, we have a hedge fund. I know CoinFund has a hedge fund. Amos has a liquid fund. But like institutional investors or hedge funds make up a much smaller percentage of the ownership of crypto assets than do hedge funds in the traditional equities world. It's probably something like, liquid hedge funds in crypto are probably, I don't know, 4% of the total market, whereas in the traditional market, it's probably closer to 50%, right? So, I think that as the asset class matures and we can value these assets in the way that Einar described, you're going to have more institutional capital in the space, and you're not going to need to build a community merely for the sake of for the same reasons. So, I think this is kind of a function of today. Ideally, it's not where we are in 5 or 10 years.
If I may, it's also about timing bear or bull market. Like I'm not sure that those platforms will be heavy with capital during a bear market. VCs will continue to invest because they have to, but private investors, I'm not sure.
I don't think also people appreciate the amount of noise you have when you've done something like that in the beginning of your project, because usually they launch it in the beginning. As compared to use it as a tool for distribution later on, I think it's something that's more suitable. The amount of noise being a public company from day one that you still don't have a product or whatever is just it's insane.
Yep, definitely. So Amos, let's go back, I think, to the discussion about due diligence and evaluating long-term value. I will refer to Hasib from Dragonfly that mentioned in the panel in Digital Asset Summit in New York. He said that in general in Web3, this is simply we are not technical enough. We don't understand deep enough the technology, and it's like a broad problem for us to evaluate projects. And I know that you at Node Capital, you do much more than just investing in companies, and you have deep technical expertise. So first of all, like, what's your take on this? How did you got to to that point? And if you have maybe tips for investors of what exactly they should do to deepen their technical expertise in Web3 when it comes to protocols.
I think my answer will be very surprising to you. I actually think that we've put too much weight on the technical part as compared to, in the end with VC, what I learned during my time investing is that um, the more important thing is the entrepreneur itself than any of the technical, Of course, like it's an advantage to have a technical due diligence, but I think, for example, from my point of view, this was one of my biggest takes from our first fund was that because we're coming from this technical background and my co-founder Rotem is very technical person, we've put too much weight on the technical part, and I think it's the answer to you is like, I think it's important for you to have, when you're investing in things that are very, very technical. Most VCs just send a deal to a technical peer that they have to review that. We're doing it inside, but again, I think this is really not the important thing when you look at investment, and it's actually my key takeaway learning from our first fund.
So let's follow up on the deployment strategy. So you're saying investing in people, and it's like an open question. Have your deployment strategy changed, let's say, between the two cycles of 2021 or 22 and today, in terms of like I would say um, the standards of projects or the things that you're looking for?
I can say for us, depends a little bit on stage. At the earliest stage, it stays very, very consistent because basically it's restricted by the number of builders flowing into the space. So if anything, I think like that might have slowed down a tad from what it was 2 years ago, because I've definitely started noticing a net outflow of builders versus 2-3 years ago. There was a huge inflow
To AI.
Yes, mostly to AI. But yeah, so a lot of the students, I live in Boston, so a lot of the MIT students, Harvard students, they're now focused on AI versus more likely to focus on AI. There's still blockchain focused people out there. But overall, that stays relatively consistent. I think in the later stages, as the market come down, we actually tend to ramp up because we hold back during the bull markets, and so we try to avoid the excessive rounds that come with that, with the excessive round sizes and valuations. Versus if you're getting later stage investments in the bear markets, that's actually a pretty strong sign in the sense that there's more likely and more likely to be traction and product market fit under the hood. So yeah, so that's kind of at least my experience here over the last couple of years.
I would say our aim is to be as consistent as possible. And in theory, what people will tell you in terms of deployment is you want to be as maybe err on being counter cyclical. But the reality is that's much easier said than done, right? It's theoretical for a reason. And that, as Einar mentioned, like during what's been a little bit of a weaker market more recently, there's also fewer great entrepreneurs starting companies, right? So I think when markets are a little bit slower on the venture side, there's often a good reason for that, and you don't simply want to attempt to be counter cyclical. In the liquid markets, I think counter cyclicality is kind of a better baseline to start from, and certainly you don't want to make the mistake in venture of getting too swept up during the bull market, especially in this industry. But even during the craziest peaks, like, some of the best companies are getting started. So I think on the whole, your aim should be maintain consistent standards and be as steady as reasonably possible.
Um,
You're welcome. We have time and then a question, so
okay.
go ahead.
I think that what changed for us, we had also an initiative called Collider Labs, which was like, let's help entrepreneurs very early. What we discovered is basically that we want to invest in founders that don't need our help. It's like the opposite of most other funds, where basically say, yeah, we will support you with this and that. We basically discovered that the ideal founder is someone that basically can do everything by themselves. And they know how to do politics, they know how to understand the game, and they just need us to basically be there when shit hits the fan, as I said before. So this is something that we learn, especially in crypto. You want to bet, as Amos said, on the founders. The founders is everything. They can change the product again and again, but it's all about the ones who have the killer instinct. This is something that we learned because I used to be an entrepreneur. Sometimes I meet a founder and I sympathize with them. And that's like a very big red signal, because immediately I remember the days that I used to be an entrepreneur, and I can rely on basically the relationship with that potential founder, and that's wrong. Like, those are the founders that you don't need to invest, the ones that actually eager for your help and your advice. You want to bet on the ones who basically continue with what they have in mind. That's our perspective.
I mean, to be honest, not much to add afterward. I think that being consistent in bear and bull market is something that we're really trying to achieve, and it's sometimes very, very hard, right? Like in the bull market, you feel like you're missing all the deals and everything happening, and we're trying to kind of like remain in our same pace, and the same on the other side, on the bear market, I guess, like, yeah, keep deploying in the same pace and doing the same thing that we're doing. So for us, nothing really changed other than what I said before and you mentioned, which is focusing more on the founders.
Yeah, maybe I can add from my point of view as a like a Web3 investor in a generalist fund. I think it really helps me that most of our general partners and the team in general, they ask Web2 questions, and it's like really, grounding to when you get asked like the most simple question, like, okay, how do they make money? Like, this is a very basic question, very hard to answer in most of the Web3 investments, and it's like, I think good to have like also that
Besides stable
point of
coins.
view. Yeah,
Stable coins, they make.
yeah. Well, when the interest rate is high, like, let's wait for the zero interest rate environment. Okay, so we have like 5 minutes left and some questions from the audience in this cool new app that I have here. Okay, let's start. I think with this one, pretty straightforward. what's your take on the AI agent space? Maybe let's do those a bit more quickly
Um, uh,
in Web3, obviously.
Okay. Well, in general, I think AI agents are one of the most fascinating trends in the world of technology. There's a tremendous amount of hype. I think over some period of time, the hype is totally justified. As is typical in both in crypto, when there's a lot of hype, there's also a lot of bullshit, and usually more bullshit than uh, you know reality. But I think the notion that we may have autonomous agents that use crypto financial rails and maybe something like some of the other primitives in crypto for governance and co-ownership and verification. Like, I think that's a very exciting use case. But I would still be very skeptical of most of the projects purporting to work in this area today.
He is not going to invest. That's the deal here. Sorry.
We've made an investment in this category.
Actually, it's one of the most active in that space.
Yeah.
Yeah.
In agent?
We've done a few things in like the intersection of crypto and AI. Yeah. And most of them have some agent angle to them.
A hard one. How many Web3 female founders have you met in the past 3 years?
Yeah, I would say 5% of the total calls, or
No, no,
something like
absolute
that.
number.
The absolute in the past
How
year?
many? Yeah,
The
or maybe
past
in
year?
general, I don't know.
Yeah, I don't know. I would say 20, something like that.
Too few, for sure. But we've had Gaia here from Byzantine. I don't know if she's in the room or not, but
Yeah.
that's an example of an outstanding female founder who just raised a round. So they are around. I don't know if they are uh, over or underrepresented relative to the Web 2 sphere. In general, in both spheres, it's way too low.
Yeah, I think even beyond founders, unfortunately, I think the space has become more male heavy over the last 3 years. Even in the early days, there were some really fantastic mission driven female entrepreneurs. And then I think in the early days of COVID, because of NFTs and some of the uh, cultural elements to crypto that were starting to go mainstream, there were more women who moved into the space. But since FTX failed and crypto has become a little less cultural, a little less cool, a little bit more focused on infrastructure and DeFi, there's been a decline, and I think that absolutely has something is left on the table when it's only a male space, for sure.
Yeah, because I was asked, like VCs tend to invest in homogeneous founders. Like, why don't we? But I guess that we don't have the answer. But at least we know that um, it's a problem and it's a gap. I can also say, unfortunately, that I think I'm at Entre Capital for in May it will be 3 years, and I've seen more than 300 deals, and I think that less than 10 of them were women. So I call out to all the women founders to start building things
Our latest
in
investment is,
Web
is
3.
in a
Yeah, and again, I think it's not just about bringing
Wait,
female
ours-
founders in,
Our
right? I
latest
think
investment is in a woman founder.
Yeah,
in a
imagine.
female founder.
What did you say, Travis?
Oh, I was just saying, like, we talk about founders, like that's all that matters, right? And I think it's not, right? I think having more female just employees in the space is really important too. And,
Obviously. Um, okay, how much time do we have left? Maybe last question. Um, let's see. Uh, yeah, maybe you can just give like a, I don't know, final thoughts, because those are questions are way too long. So maybe like closing thoughts about what we talked about.
Maybe I can give a couple comments on the scene in Israel, which I've been lucky enough to see here over the last couple of days. And I will say I've been incredibly inspired by what I've seen. There seems to be a lot moving on the ground here, a lot of passion, and a lot of incredible talent, I will say. So It's been a fantastic experience to be here at Building Blocks and in Israel in general. And this is looking very promising, I would say, for the future of crypto in Israel. So
Thanks
you.
for coming.
Thank you for having me.
Yeah. So we will wrap it up again. I think it's really not taken for granted that you came all the way here, and Travis. Thank you, Collider, for hosting this amazing event and the entire week. Thank you, everyone, for coming and being with us today.
Building Blocks 2025 in Tel Aviv.